The markets continued their recent pattern of a slow grind higher during this seasonally strong part of the year. We did see all four major U.S. equity indices touch an intraday all-time high, and 3 out of the 4 did have a closing all-time high as well. Russell 2000 led the way today with gains over 1%. The other 3 indices didn't quite capture that much momentum. All in all, a pretty positive day. So we'll take a look at all of that to see what it means for our posture. Then we'll get into our trade application example, where I focus on a cloud computing stock that is hitting new highs and kind of breaking out to the upside. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 8th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area where you can sign up for our email distribution list. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ. We really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook. Feel free to join our group at the web address you see embedded in the logo in front of you. All right, let's go ahead and jump into our trading activity here for the day. And as you can see, I've got chart 4B pulled up here in front of us. A reminder that all of you that are premium members of Market Scholars have access to all 50 of our customized charts that you see David and I using on Thinkorswim during these presentations and during our premium and plus classes that we hold throughout the week. Remember, many of you that just watch us on YouTube will maybe catch us 4 or 5 times a week, but we actually teach 10 additional classes throughout the week for our paying members. So if that's something that is of interest to you at some point, make sure you check out our offerings. We really appreciate those of you that signed up with us over the Black Friday weekend. It's been fun getting to know a lot more of you. Anyway, as we look at this chart setup here, 4B will be kind of a bird's eye view of kind of the 4 major U.S. equity indices, and that way we can kind of look at them side by side and just try to get a sense of whether they're all kind of looking the same, whether there's some differences here or there. And right now I would say things are pretty much similar across the board. That wasn't always the case in 2020, but right now it does seem like markets are behaving themselves, whether we're talking about mega cap stocks, small cap stocks, or everything in between. So as you can see here, we've got our high label showing up above the candle on all of our charts. You'll also notice that you've got this kind of green label showing up above the charts as well, both of them signifying that today was not only a 3-month high on the chart, but also a yearly high. And, you know, if you want to take it a step further than that, technically an all-time high as well. And as I mentioned in the intro, we did have closing highs on 3 out of the 4 as well. The one that missed the closing high was the Dow Jones Industrial Average, although it was still nice to see it up today. It was up 0.35% and still was able to hold that very impressive round number of 30,000 or higher that had been established a few weeks back. So all in all, a pretty positive day. You can see that there's not a lot of change from what we have been kind of discussing for the last several weeks in these presentations. Basically, slow grind higher. Day after day after day, it just seems like we're constantly building upon gains with a few setbacks here and there. But generally speaking, things are running smoothly. And, you know, this is a strong time of the year. November through January is typically known as the best 3-month period. So if you were to chop up the market into 3-month periods, the one that we're in right now from November through January historically has been the strongest. So I guess status quo suggests that all else being equal, we might as well be bullish during this time of year, and so far so good on that front. You can see all 4 of our charts do have green moving averages as well. Remember, those moving averages do change color depending upon what is happening with the price in comparison to the moving averages. When they're all green as they are right now, it basically means that price is above a rising moving average. And remember, this moving average itself is a 30-day moving average. In terms of our posture, I think I mentioned it before, but if you haven't figured it out already, we continue to be strongly bullish. The green line on the market forecast, which will be referred to as the intermediate line, is in the upper reversal zone. So whether it's rising or falling, as long as it's in the upper reversal zone, we consider that to be strongly bullish. And as you can see here, we've got it in the upper reversal zone on all 4 of our charts, with the NASDAQ actually, I take that back. I was about to say the NASDAQ being the highest there, but technically the S&P 500 just a hair higher than it on the intermediate line. It's at 98.29. NASDAQ is just a hair below it at 98.2. Both of them stellar performances. Remember, this can only go to 100. So when we're looking at these numbers in the high 90s here, it's basically telling you we are in a very strong bullish mode right now. And of course, you didn't need me to tell you that. That's been the case for a while, and it continues to be the case. So let's go ahead and take a look at another chart setup here. And in this case, we'll take a look at the 3 green arrows chart setup, and that will be chart 4D for those of you following along at home. As you can see here, we do have 3 out of the 4 charts in front of us with a 3 green arrows signal. The one that is the holdout is the Dow Jones Industrial Average. That one, we're just not quite able to achieve a green arrow on the MACD histogram. All the others do have 3 green arrows. Remember, a quick way to read this from a visual perspective is if the background color of the charts are currently green, like they are for the other 3 charts, that means that we have a 3 green arrows signal. Now that's, of course, precisely on this chart setup 4D. Every chart setup's a little bit different in its nature, but this one, if the background color is green, it says that we've got 3 green arrows. And something of note that's worth pointing out that's new today is the Russell 2000. Remember the last time I did the video, which would have been on Thursday, we had the S&P 500 and the NASDAQ composite on the left-hand side, both with 3 green arrows, but then the 2 charts on the right, the Dow Jones and the Russell 2000, had a mix of green and red arrows. So this is something new here today since the last time I did the presentation. Russell 2000 has been moseying back higher again to the point where you're able to say that this market does have true momentum again. Remember, that's what the MACD is trying to measure there. And of course, if you're not familiar with the MACD or the stochastics or some of these other terms that we use in these presentations, if you are a premium member of Market Scholars, there's a great thread over on the Technical Analysis Forum over on our website where we had one of our students that kind of detailed out all of the different topics that David has discussed in his technical analysis class that he holds on Fridays, where he's talked about a number of these concepts, so you can kind of take a deep dive on them. And on that note as well, I've been working with a few of you that had signed up during our Black Friday sale on getting you permission into our premium forums there. Last night I did take a few hours and just set aside the time and just manually added all of you to it. So anyway, for those of you that signed up with us over the Black Friday weekend, you should be able to access all of our forums now, including that technical analysis forum where you can find that list of topics that dates back over 3 years or around 3 years at this point. All right, let's go ahead and take a look here at our next chart setup. And this one is going to be our 1040 crossover method. Now remember, this particular chart setup takes us back further in time. The other charts that we've looked at so far have been 3-month charts. This is a 3-year chart that we're seeing here in front of us. Each one of the candles you see is 1 week in length, not 1 day in length. So it gives us an opportunity to look a little bit further back and just kind of take more of a bird's eye view towards the market situation as opposed to kind of zooming in on what's happening right here, right now. And as you can see, from a longer term view, we do have bullishness from a posture perspective here. So when we talk about this 1040 crossover method, what we're referring to are these orange and blue lines on the chart. The orange line will represent a 10-week moving average, and the blue line will represent a 40-week moving average. Sometimes on CNBC or Bloomberg or Fox Business, you might hear people refer to a golden cross or a death cross. That's effectively what they're referring to. Now, some people choose to use it on daily candles where they're using a 50-day and a 200-day moving average. In this case, we're using it on a weekly candle where we're using the 10 and the 40, but they equate to approximately the same thing. And so when we're looking at these charts here, you can see that we've had green background color over our most recent candles for quite some time. So there's not a whole lot new to report. The most recent crossover that we had would have probably been right here on the Russell 2000. Back in early August, we got a bullish crossover there where the orange line went up and over the blue line, and since that time period has remained bullish all along the way. And like I mentioned to you guys here a week or two ago, what was important about the Russell 2000, which made it different than the other three indices, is this was the only index that had not yet achieved a new all-time high. So within the last month or so, these have been very important candles over here that got us up and through these candles back here from August of 2018. So consider it kind of a breakout candidate here from an index perspective, with the small caps finally playing a major round of catch-up with all of the large cap brothers and sisters out there. You can also see some positive vibrations down below on this PPO line in purple down here. When you see it rising like we see here pretty rapidly on the Russell 2000, basically means that these two moving averages are expanding away from one another. And that's generally perceived as a positive thing, because the orange line is going to be more sensitive as it's only tracking the last 10 weeks. The 40 period is going to be less sensitive because it's tracking a further look back period. And so if the orange line is really taking off and separating itself from the blue line, it basically means there's a lot of pent-up bullish demand that is being manifested in the market at this moment in time. So that's a really strong sign there as well. You'll notice that on that purple line down below on the Russell 2000, that's the highest level it has been at in the last 3 years. In other words, the separation between the orange and the blue line right here on the 10-week and the 40-week moving average has never been greater than this moment in time. In other words, the bullishness is very extreme right now. All right, let's take a step on over to the internet briefly. I always like to have an opportunity to say thank you to those of you that help support this presentation. Remember, David and I do this presentation on YouTube for free. We hope you guys get value out of it. And if you do, we ask you to do one simple thing. Just click like for us there on Twitter. If you don't get value out of it, you don't have to do anything. But then again, you shouldn't be surprised if there are times that we can't do the video if it's not being supported. So you guys have been great about that. I have no issues with it. You guys naturally will tend to get me up and over 100, which is what I'm typically shooting for in terms of likes here. As long as we can continue to do that, I'll continue to dedicate a couple of hours of my day to do the presentation. So keep up your end of the bargain. We'll keep up ours, and hopefully we'll all have mutual benefits there. But thank you to those of you that help support us, not only now, but throughout all the years that you've been watching these videos that David and I have been putting together. Now, earlier today, we did have my dividend growth investing class, and we talked about two mid-cap industrials companies, which is fairly rare. Typically in my dividend growth investing class, we're going to look at large cap, perhaps even mega cap types of companies. So today was a rare time where we focused on the mid cap space. If you're interested in that and you're a premium or a plus member, remember you can access it by clicking on the Trading Rooms tab up here, and then the recording is now available for you. David taught his directional option strategies class, so feel free to check that out as well. Tomorrow I've got my factor-based swing trading class first thing in the morning, and then David will be doing his options inventory class at 2 p.m. Eastern time tomorrow. Also wanted to take a peek at the sector selector here. Now remember, this version right here is just a screenshot that I took as of Friday's close. So this information might be a couple of days stale here, but still noteworthy nonetheless. So I occasionally try to bring it up here during these market Outlook videos. Remember, those of you that are premium and plus members, you can also get my analysis on this each Monday during our top-down trend trading class. And we use it to help guide our decisions in that class. And boy, oh boy, did we have quite the surprise in the last couple of weeks with energy just absolutely erupting to the upside. You can see this big move that it's made here in the green line from basically the bottom to the top in just a couple of weeks' time. That is incredibly rare to see. In fact, I don't think it's ever happened in all of the years I've been doing this particular project, including its predecessor that I used to do at the prior company I worked for. So this has been a major move, and it occurred only because of a historical move in the oil and gas stocks. I've been mentioning in this presentation to you guys in recent weeks that energy in the month of November effectively had its greatest month in history. So it takes something truly dramatic like that to cause such a disruption on this sector rotation model that I'm using here. But it was a big deal. In fact, my Monday top-down trend trading class bought an energy stock on Monday, and it's a stock that most of you probably have never heard of before. So that's a little tease for those of you that are Premium and Plus members. Go and watch the recording from Monday and check that out. But what's noteworthy about that is it had been 2 years since we owned an oil and gas stock in that class. That particular class focuses on implementing the 3 green arrows strategy, but only doing it on stocks that come from strong sectors and industries. And for the last 2 years, we have not seen energy stocks strong enough in comparison to the other sectors to seriously consider the stocks within that sector. So we've literally been out of the energy market for 2 years, and then all of a sudden it was kind of thrust upon us. And so we took our first little dipping of our toe in the water with a brand new energy stock on Monday's class, and we'll see where it goes from here. I did notice that it was up, I think 4% today or something like that. So I think we're off on the right foot, but we'll see where it goes. Obviously, there's a little bit of nervousness around a situation like that, knowing how oil and gas stocks traditionally have struggled to sustain any of their previous rallies. So we'll see where this one takes us, but did want to alert you guys of that since it was such a major movement. Also, while we're over here, I'll also point out that in the orange line here, you'll notice that technology went from number 4 up to number 3 week over week. I'm pointing that out specifically because it will affect our trade application example that I'm going to share with you here in just a little bit. So let's go ahead and tackle a few more charts. Popping back on over here to the Thinkorswim platform now. And let's do some 12 grid analysis, starting with chart 5A. And this will be our asset class 12 grid. And a reminder that the background colors of these charts will tell us what the current posture is using the intermediate line on the market forecast technical indicator. If the charts are green, it means the current posture is bullish. If the charts are pink, it means the current posture is bearish. And so as you can see right now, we only have 2 pink charts on the board. Over here in the lower left-hand corner, we've got kind of in the lower true low left, we've got the US dollar, which, remember, we've been talking about its bearishness for a long time now, so that should not be a surprise. And either should the chart just above it, which is the long-term U.S. Treasuries. We've also been talking about that for a long time being bearish. In fact, we actually have a bearish trade on that for this trade application example in this video that I put on a few weeks back. So these are not new pieces of information to learn, just an understanding of where we're at and how the trends currently exist. Now, you'll also remember that when I was with you, I think it was last week on Thursday, I mentioned that we should not be surprised if we have some sort of a reversion to the mean type of a move out of the US dollar in the coming week or so. And that's exactly what we've seen unfold here in the last 3 days. You can see the US dollar is up 3 days straight here. Now, the question is, does it matter? And, at this moment in time, I would say that this is not an earth-shattering move. In fact, I would call this a bit of a whimper. That's not much of a move at all. Yes, the market was up 3 days in a row there for the US dollar, but those are puny moves. When you saw a drop in this magnitude that we saw for the US dollar, and it culminated in all of these oversold cluster signals, a lot of times the reversion to the mean type of a move is going to be really aggressive to the upside, where you can maybe expect it to get up to its downward trending 30-day moving average. Right now, yeah, we've got 3 days in a row, which is more than we can say for most of the other time. Last time we had 3 days in a row would have been back here early November. So, I guess it's a start, but from a percentage move basis, that has been kind of a nothing burger right there. I would have expected a much bigger move there. So it could go to show you that the bears in the U.S. dollar are very, very aggressive, and they're not really even allowing the bulls to win a couple of innings here or there. It's really ugly out there for the U.S. dollar at this moment in time. So I'll, of course, keep you posted if I see that changing. But right now, my mindset continues to be U.S. dollar lower, with, of course, some reversion to the mean types of moves along the way like we're seeing right now. Same thing can be said really for TLT, although I think TLT's chart does look a little bit more promising than the US dollar. You'll notice that TLT has a bit of a double bottom forming here from basically November 10th to looks like the 4th of December right here. So those two moments there, a bit of a double bottom as opposed to a continue lower lows and lower highs like we've seen with the US dollar. So we'll keep our eyes on it. Right now, my assumption is still that that TLT is in a moment in time where it struggles, but this one is stabilizing a bit more where it wouldn't be completely out of left field if there was some sort of a trend change that would take place here eventually. In order for that to occur, you're going to need to see it spend some decent amount of time above its 30-day moving average, right? Over here, we spent maybe 4 or 5 days above it, but it just couldn't really keep those levels. Pulled back, but showed some promise by not breaching those prior lows and now is bouncing again. So if it gets back up into this same area, I think that is a constructive activity for the chart there. So we'll see if that happens or not. Right now, with it still trading below its 30-day moving average, you should assume that it will continue to be bearish, but it wouldn't be completely surprising if there was an opportunity here for it to start trying to make a trend change. In terms of the other charts, they're all bullish, and they all look pretty strong for the most part. The one exception to that, I would say, is probably gold, which is this chart here on the bottom rung. You can see that the background color there is a light green color, telling us that we have a weakly bullish posture, not a strongly bullish posture. And when I look at that chart, I still think there's a lot to be desired there because, we still are sitting here dealing with this downtrending moving average. And yeah, we were able to close above it just barely today. That's why the moving average changed from red to yellow there today. But it's going to have to do a bit more work to convince me that it's kind of done with its selling right there. Otherwise, the rest of the charts do look pretty strong. One thing I've been pointing out here recently is the foreign markets are looking a lot better than the U.S. markets as a result of that falling U.S. dollar. You'll notice here EFA is up 13% versus SPY's 11% over the last 3 months, and EEM, which is the emerging markets, so EFA is developed, EEM is emerging, is up about 17% versus that 11% there. And of course, both of those strongly bullish postures above their rising 30-day moving averages. But I mean, if you look at the rest of the charts, they all look kind of nice, right? Even preferred stocks. We don't talk about those a lot because they're kind of boring, but even they can get into their own trend. And PFF here is a good example of a fairly consistent, perhaps a little bit quiet, but certainly a strong trend that's in place for preferred stocks. Remember, many preferred stocks come from the financials sector, and that is one of the sectors that is starting to benefit with this this COVID-19 vaccination news. Ever since the Pfizer news, we've seen a lot of those banks rebound. Banks are some of the key areas that issue preferred stocks. So sometimes you do find that preferred stocks kind of trend in the same direction of whatever is happening with financial stocks. But if you look at foreign bonds, look at the difference between foreign bonds and U.S. government bonds. I mean, it's night and day. And this is not something that's new. Remember, this was something that I had identified with you guys a few months ago, and it continues to be the case. So if you're looking for kind of that capital preservation and you don't like the looks of the U.S. government bond market, perhaps you'll like what you see there with the foreign bond market, and we're just using BNDX as our proxy there. All right, let's go ahead and take a look now at our sector analysis. So this will be chart 5C for those of you that are following along at home. And you'll see down in the lower right-hand corner, we've got two charts in the pink. One of them a dark pink, one of them a light pink. The dark pink is utilities. The light pink is real estate. And remember, when we were looking at the sector selector there a moment ago, I know I was concentrating my efforts there for you on energy and technology, but some of you might have caught that utilities were the ones that were dead last. So they were the ones that kind of took over in the last place position from energy once that transition took place in the last couple of weeks. So utilities are kind of that weak area, and real estate doesn't look nearly as bad as utilities, but still doesn't look good at the same time. You can see kind of more sideways price action there in real estate. Now remember, both of those, what kind of joins them together is that they are very interest rate sensitive. In other words, when interest rates go up, you will typically find utilities and real estate investment trusts struggling on a relative basis. You oftentimes find that financials companies like banks, brokers, insurance companies tend to do well. And that is the kind of relationship we are seeing play out right now. Interest rates have been going up for the last 3 months. Financial stocks are in an uptrend. Utilities and REITs struggling on a relative basis. So if you're looking for momentum in the market, those are the areas you're probably staying away from. If you're looking in other areas, you're doing pretty good because, I mean, you've got a lot to choose from right now. That was one of the things I was stressing with my audience on Monday in my top-down trend trading class, is that this has been a broad-based advance. It is not just the generals, the FANG stocks that we used to talk about leading this market. This is a broad-based advance where we've got the entire army moving up on the chart. So it's a good sign. Very strong market breadth would be another way to kind of phrase that there. But some of the areas that are impressive are the more cyclical areas, right? The ones that are doing the worst on a relative basis are generally this bottom rung down here. Healthcare, staples, utilities, and REITs. Those are kind of oftentimes viewed as defensive, non-cyclical sectors. The ones that are doing the best are the ones at the top, which are the most cyclical within your sector rotation model. So it kind of gives you a sense of what the market's appetite for risk is. And right now, the market is very willing to assume risk in order to capture reward. Now, you will notice here that one of the areas that really excelled today and hit a new high was technology. We're using XLK in this case as our proxy, but you'll notice XLK's candle hit a new, I think this is an all-time high. For certain, it's a 3-month high here on the chart, but I'm almost positive it's an all-time high as well. And that does kind of make it a little bit different, right? If you look at all of the other charts, you're not seeing another chart that hit a new high today. Now, SPY did, but that's kind of a separate conversation, right? We've got SPY in the upper left, and then all the other 11 charts are the sectors. So technology is basically the most important sector within the overall market, which is why the market itself was able to hit a new high today, because remember, it's a market cap weighted system. But it is kind of interesting to note that technology, once again, a leadership area there, and is back to new highs. So that kind of rolls us into our next part of our conversation, where we discuss our trade application example. And so I'm just going to come over here and let's just pull up chart. How about we do 4A, just a regular market forecast one grid here. And the stock in question is a cloud stock. It is ServiceNow, ticker symbol NOW. And kind of caught my eye today because first of all, it hit a new high. But in addition to that, you can see it's kind of clearing out and over some of this prior resistance area. This is not one of the strongest stocks in the last 2 months. It is a stock that has largely been kind of, chop and slop sideways during the last couple of months that we're looking at right here. So it's a good sign that today we were able to bounce up and off of this little support area right here, and we were able to close at a new all-time high. This has been a great stock, a legendary stock from a growth perspective over recent years, despite kind of just stalling out here in the last couple of months. But to put that into perspective, take a look at a 10-year chart on this stock. I mean, it is the thing of beauty. It was a $22 stock 10 years ago. It's a $542 stock at an all-time high here today. So, each and every time somebody would have bought the breakout on this stock as it marched from 22 up to 542 where we're at right now, you would have eventually seen higher highs at some point. Now, of course, people would maybe get stopped out along the way or whatever. Everybody's situation would be different, but it's just kind of a high level way to kind of think about that, because I know sometimes people get really nervous buying stocks at new highs. But remember, this stock was at new highs for a majority of the last 10 years. And what did it do after hitting those new highs? It continued to hit even more new highs. So obviously that's not a guarantee, but at least is a way that you can kind of start thinking about things in your head there. So anyway, I ended up selling a bull put spread on this, and remember how I do it. I actually place the trade within the final half an hour usually of trading, and I post that to our Telegram app for our premium members of Market Scholars. So that way they can see the strikes that I'm trading, the fill prices that I'm receiving, and they can consider those trades for their own paper money accounts. Gives them a slight information edge over everybody else that's just going to watch the free YouTube video later in the night. Also gives me the benefit of getting the trade filled. There were times in the past before I had that policy where I would have an interesting trade set up, but the market would move by the time that the stock market would open the next day. So it kind of benefits me from that perspective as well. At least I can get the trade done when I see the trade exist. And so with this one, we are looking to basically try to keep it above that rising 30-day moving average. If that can continue to be the case, we should win that trade. I did focus on the January contracts, and if you need the strikes and the fill prices, as I mentioned before, check that Telegram app there. But this would be a bullish trade based upon a breakout philosophy that we have here, and we would be trying to make some money off of time decay by selling that bull put spread along the way there as well. So feel free to investigate that on your own if it's of interest, but I thought that was a pretty exceptional breakout there to yet another all-time high for one of the best growth stocks of the past decade here with ServiceNow. So that's what I had for you here tonight. If you got value out of my analysis, if you appreciated the couple of hours that go into the prep work, the placing of the trades, the recording of the videos, the editing, the uploading, sending out of the notifications, and the whole ball of wax, I have one simple request for you. Just click the word like on Twitter. That will go a long ways with me. So thank you very much for those of you that are tuning in. I'll look forward to seeing you all the next time around, which for me will be on Thursday, and David should be back with you tomorrow. Have a great night, everybody. Take care. Bye-bye.